And of course, a big warm welcome out there, everybody. I want to thank you all for being here today. It's 9:45 Eastern Time right now. We are right in the middle of our first trade of the day. And this trade today was as easy as 1, 2, 3. The first step was finding the structure. Now, at 7:30 a.m. each morning, we go through our formal prep. And we found a very big clue in the form of an ABCD pattern. The ABCD pattern this morning was also located on our 21 range chart. You can see that ABCD right here. So the structure was easy. And we talked about how the structure will actually provide you with a range, right? And there'll be a range. Now, guys, my stop's at 35 on crude. My stop's at 35 on crude. So we knew that when we broke out of this range on crude oil, we gave you guys the exact entry, the exact targets, and the exact stop losses. So all you had to do as a guest or a member was to trade it right along with me. The big clue, first of all, was the structure. The second thing we did was we found the pattern. The pattern was really easy, and you can probably see a great example of this pattern on this 13 range chart. This is what we call a two-step pattern. And this two-step pattern was really easy to find because, well, we're properly trained on this as members. So we took our two-step pattern off the highs. Again, I got a 35 stop here on crude oil. The two-step pattern that came off the highs, we took our first two targets while the price was falling to the lows. We took profit targets at 35. We took profit targets at, 28, 25 because we knew we had a trend line there. So step number one was to find the structure, the ABCD pattern. Step number two was to find the pattern. It was a two-step pattern. And step number three was to execute and manage the trade. We executed the trade when we saw the rising speed. Rising speed was also combined with sellers. Rising speed on the pace of tape indicator, followed by what appears to be the sellers in charge on the delta. If you follow me up top, we're also looking at large blocks of sellers on my time and sales window, which confirms the whole thing. So whether you're reading tape, finding sellers when you're reading tape, or whether you use the delta indicator, which comes with membership, we combine that with speed. We saw increasing speed, and we saw sellers either on the tape or on the delta. That confirmed the entry. We take the entry short, and then we immediately then swing into action and make sure that all of our profit targets are placed correctly. Now, this is actually a really good example right now. My stop is doing a really good job at holding me in. My stop loss I've trailed because my stop loss, once I get about 25, 30 ticks on a runner, I now want to start thinking, at what point will this trade reverse? And we use this term called inflection, right, where the 34 trigger line, its support when we're above it, it then becomes resistance when we go below it, right? So where would the trade become invalid? Above resistance. And so that's why I've trailed my stop. So the final step, step 3, this trade is as easy as 1, 2, 3, is to place your profit targets, trail your stop, and again, I have a final target down here, which is just off the low of day. And you know me, I'm always going to err on the side of caution, and I'll add 5 ticks to that low of day, 94.05. Okay, now this is actually not exactly what I wanted out of this trade. I wanted to get the big runner, but if I have to get stopped out, at least this is a good example. Notice how my stop loss is triggered. It gets me out of the trade, it takes my profit and runs, but please also notice how fast price moved up. This is a really big, this really reinforces why I trailed my stop the way that I did. I'd rather get out of that trade at 35 than get bounced out of it at my point of entry. See how that would have bounced me out at my point of entry? And I certainly don't want to keep my stop way, way too far because I would never want to let this winning trade turn into a losing trade. Make sense? Now, some of you may say, but Joe, a wider stop allows me to stay in the game longer. Oh, you're absolutely right. Spoken like that dog that wants to cross the street in rush hour traffic, right? What do they always say? It's the pigs that get slaughtered. Don't be too greedy. We want to be conservative. This is my first trade of the day. I haven't earned the luxury to have a wide stop yet. Once I put some of the other traders' money in my account today, then I'll feel okay having a wider stop. One of the things that I always talk about, though, when it comes to stop losses for new traders is guys, resist the temptation to use a really wide stop. In my humble opinion, a tight stop can be done when you are on your point for entries. When you know when to get in the market the right way, you can use your tight stop. And one thing also is I never want to let a winning trade turn into a losing trade, even if I thought that it may keep going, right? We can hope and pray until the cows come home. But both of those four-letter words are not good for my long-term trading strategy. Guys, by the way, here's your entry for another contract on the 21 trade plan, right? Here's another entry for your 21 trade plan. You were in short with one contract. You can enter again with another one here. So we tightened up the stop because I don't want to, even though I do think it will keep going lower, I can't take the risk of losing money on this trade. And wouldn't it be a shame if I lost confidence? This winning trade just built up so much confidence for me. It'd be a shame to lose that confidence by letting a winner turn into a loss.